Hello, YouTube seniors. If you're considering final expense insurance, it's a great idea to ask some important questions before you're making decisions. And you might be talking to multiple agents, and just make sure you ask these questions, and they will help you it will equip you to have a productive conversation and have all the information you need so that you can make the right decision. Did I say that one more time again? Yeah, it will help you to make the informed right decision. Okay, let's talk about the questions. The question number one you need to ask is, what is the coverage amount? So final expense policies usually range somewhere from $5,000 to $25,000. So make sure coverage amount aligns with the cost you want to cover. And question number two, is there a waiting period? This is so important. For most insurance policies, the coverage kicks in when the insurance company accepts the application and the first payment is settled. And so you will be covered right away. However, some policies have a 2-year waiting period, meaning full benefit are not available until after 2 years. And knowing this upfront will help manage your expectations. In that case, if anything happens, like if you were passed away within the first 2 years, for most insurance companies, they will return all of the premiums back plus an interest, but it's really company by company. So that's something you really need to ask if that's the case. So question number three, is this a term or a permanent policy? Term insurance usually is cheaper, and lots of seniors are fall for it. They're like, okay, I saw on the ads it's like $10 for 100,000 of coverage, and I often get questions like this. And more than likely, those are not true. And also, even that there are cheaper policies, those are term insurance. So term insurance is only covered for a short period of time. Most common ones will be 10 years. We call it term 10. So if you were passed away within the 10 years, the full benefit will pay out. But what if you outlive the policy? There will be no coverage left, like zero coverage left for you. And since you are 10 years older, then you might not qualify for a new one, or at least the plan available to you will be a lot more expensive at that time, just because you're older. And permanent insurance, on the other hand, it will cost a bit more comparatively with the term insurance, but it will always be there whether you live until age 70 or age 120. So no one knows the time and the hour. And so final expense insurance, like when we're putting an insurance policy for that goal, it is the best to have a permanent policy in place. Question number 4. Is the premium cost stay the same over the life of the policy? This is really, really important if you're a senior. I see some policies start cheaper than any other insurance companies out there, but the premium increase every year for the same coverage. Policies like those are very difficult for seniors to manage later on, especially if you're on a fixed income. Your income will not increase as fast as the coverage, and it is very hard to budget for such an increase. If you already have a policy placed, double check if you got a policy like this. Question number 5, what is the reputation of the insurance company? Does it have a long tracking record? Are they financially stable? How long is the company in the business? What other lines of business do they have other than the final expense market? And these are questions, like, I know it's not just one question, it's like a group of questions, but these are really important questions to ask. because you want like I do my research and make sure like all the company that I pick have a long history, have good reputation, have a stable financial record, and also have multiple lines of business. Why is that? Because if they can stand with all the crises in the last 100 years, the chance of them surviving the next 100 is much higher. And when they have multiple lines of business, for example, let's say they have like group savings or employee benefits or individual term life insurance, etc., they're less likely to rely on just the final expense insurance business, so that they are more stable in that way. So even the payout ratio, let's say in this area, is a bit higher, it's not going to affect their overall performance, and they were not likely to be so sensitive to raise their premium right away, because this might just get compensated with other sectors of the business. So this makes the plan a lot more stable. And I always like to work with companies that I can trust, because for life insurance, it might like you might use it for 10, 20, 30 years and until that pays out. So we want to make sure it is a very good company to start with. And other questions you might consider are, does the policy have cash value? If you are looking for term, is that renewable? What is the renewable rate? And what is the cancellation policy if I decide not to having that anymore? And is this a Canadian insurance company? And trust me, like I had a couple clients even get American companies to come and just ask for the final expense, but there are different rules for Canadian companies and American companies, and I'm not gonna go too much in detail for now, but you are the best is for you to find a Canadian-based insurance company is the best for you. So I hope this guide helps you feel confident when you're speaking to an agent. And if you found this helpful, give us a thumbs up, and don't forget to subscribe for more insights on senior insurance planning. If you would like to have a conversation with our team to get more specific information about your situation, please book an appointment with us. Use the link in the description below. And if you do have questions, and type them in the comment section, and we will answer them as soon as we can. Thank you so much for watching, and I will see you in the next video. Bye for now.